Good morning, guys. How are we all doing? So Dan from Trading with Dan here. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, and we shall go straight over to those Bitcoin charts. So yeah, Bitcoin on the 4 hour. This is where we kind of left it off yesterday. We were looking to try and either break above that 51 level and close the candle above there, or below basically roughly where we were, about 49. So what happened is we came up and we tested. Well, actually, we tried to, we were wicking around in this area. We came all the way up to actually test the overhead resistance at about 52k level. Subsequently rejected, and then we came down hard after that. But it is nice to see how the horizontals are respected. So yeah, that was a target if we moved up. Weren't able to close the candle up there, so rejected. Once we had that kind of bearish hammer candle, once we traded below it, you can see that we then got continuation to the downside. That continuation literally came from top to bottom, so we tested the bottom side. We had a little bounce, but then that was not to be at all, and we actually took that out. But that was predictable at this point, that once we came down and tested it, especially with such momentum after this move down as well, that we were gonna come and break it. So what happens now is the big question. We are only just into this next 4-hour candle. Obviously we closed this one down here, so we have closed 4-hour candle below this $46,000 level. So that would implicate that we are gonna come down to about the 41 level. But however, we've got this candle here. If we can get back above back above 47,000 in the next 3 hours to close above there, this could just look like a bit of a fake out below this this horizontal, this support, and then we can continue our merry way, at least for the time being in this zone. However, obviously if that doesn't happen, I mean, we're coming to try and basically backtest it now. If we get rejected here and come back down, then yeah, it would look incredibly bearish, and we will be looking at this next level. But yeah, like I said, that's not happened. Until that happens, I would give it the benefit of the doubt for this next 4-hour candle. Basically, do we get a textbook rejection of the old support turned new resistance, or do we get back above, have a textbook bear trap, and then continuation to the upside? So this next 4-hour candle, I think, is pretty pivotal for the short-term moves, even probably the medium-term move, because obviously coming down here would keep us down here probably for the medium term. But yeah, so get this candle above 47k, and then we can start to look like we are gonna at least test some upside. Whether how far up that upside will be will remain to be seen. If we get rejected, and we come back down and we close this candle, I mean, anywhere in the mid 45ks, it is not gonna look good for anything other than a move down to 42k or below. So yeah, testing a bit of the downside in good old Bitcoin. I just will just remind you guys that we are currently not even at a 25% retracement. Bitcoin bull markets are have plenty of 40% retracements. We've already had about a 30% retracement, I believe. This one was off the top of my head. I'm sure this was just over 30%. Yeah, here we go, 31.5%. So even if this was to be a 31.5% retracement, just to compare it to the last one, we are, well, yeah, I mean, realistically, we're looking at probably getting down to this this level here. Not particularly going to look good, because I do kind of think we've got to try and hold this for, well, at least hold, well, we just call it 40k. Keep it simple. We've got to hold 40k, I think. Otherwise, I think there is a high likelihood we could be coming down. We will coming down to 30k, and then we'll obviously, the market will have to assess what it wants to do at 30k. Because lose 30k, then I think, well, lose 30k could be bull run over. Next up 20k. But yeah, like I said though, we're not we've got this next 4-hour candle for a start to try and save us. We've then got this 42 level, a 42 level support level before we could take out 40k then and then come and try and test lower. So it is not we are not basically we're not in a bear market yet, put it that way. And crypto does like to test your patience. You can see this pattern we had going down here. It's looking pretty bearish, pretty much like a descending triangle, but Elon, the man himself, managed to stimulate a bit of another pump up. But can he do the same? What can happen? We shall see. But interesting times. But yeah, people are running around panicking over a 25%, not even a 25% pullback from the high. These guys are clearly not being in cryptocurrency for more than 5 minutes. Yeah, gold, other markets struggling. Gold getting hammered here. If we just extend this downward channel, you can see that we'd basically just been kind of following this around on our lows. So I potentially would expect a bounce in gold here. Silver though. Silver holding on up there. As you can see, silver not as bad as gold at all. Obviously that being indicated by this chart, which is obviously the gold silver ratio. Dollar index having a bit of a bounce back up as well. So that, as you can see, had a bit of a fake out below, like what we could be happening in Bitcoin, a bit of a fake out below the important level, and coming back up, well, basically back up to test this level. So obviously still looking bearish. Had a swing failure, as you can see, above this from this head and shoulders chart pattern. So we are now squeezing. So now it's a case of when the bulls in this asset want to basically stop squeezing the bears that are all shorted below here, how long they can hold on for. But ultimately, once this squeeze is done, and I would probably suspect we're not going to get above this high here. So realistically, I mean, even during a trend line, we're practically at where we could get up to, and this horizontal as well. This could start to come down, so could give Bitcoin a bit of a tailwind. Yeah, Ethereum, it is fully and formally back testing this level here. It's similar to Bitcoin. There's a bit of a do or die here. We basically got to get back above here and start making progress, otherwise we are coming lower. Yeah, I mean, that is it. Otherwise we're coming lower. The Ethereum, Bitcoin, this is kind of stalling out a bit. Maybe this could put in a potential low here. Don't forget, a lot of the money has been flying to Bitcoin. Bitcoin has obviously been outperforming, so there is a potential for more money to fly out of Bitcoin. So whilst Ethereum can come down against the US dollar, whilst Bitcoin comes down, it could start to not come down as quickly. And I know that is a dynamic that people don't really expect. They expect if Bitcoin goes down, alts go down more. But they also kind of expect sometimes when Bitcoin goes up, alts go up more, and that's not particularly been the case. 10-year, this is obviously scaring people. We have drawn in this very important horizontal, which we subsequently took out. We are looking like a forward check, a back check, and if we get a paycheck trade on this, then it's not gonna be pretty, generally speaking. And there's obviously a lot of confusion in markets around this and what it means, and what its implications for markets are. And when I say a lot of confusion, I mean it's pretty obvious this is bearish for stocks. There's not really confusion around that. I'm pretty much talking about crypto and commodity markets, where some people are looking at this obviously as gonna cause a recession. Not that we're not in recession, but yeah, just looking like this is going to cause problems, which then could hit commodities. But I am looking more at this as just a product of inflation. So that is obviously going to be good for commodities and cryptos. That's where my bias lies. But obviously in the meantime, there will be those opposing inflation, deflation people that are always there fighting each other, that are gonna be trying to work out. And then don't forget, I mean, when you get these inflation, deflation people arguing with each other, I mean, a lot of the deflation people are quite rightly talking about asset class prices So yeah, even bonds obviously as an asset class, property as an asset class, yeah, great, they can come down. They have been pumped up with basically pumped up with liquidity, but commodities haven't really. So you can basically, we could get deflation. So basically what I'm saying is it's not like a blanket. We get inflation, everything goes up by a certain amount. We get deflation, everything goes down by a certain amount. We could get, obviously we probably, and we do get different inflations and deflations levels in different assets and different things, and clearly, obviously, we could get deflation in property and bond prices and stock prices, and we could get inflation in commodity prices, and that is, my friends, is called stagflation, with increasing input costs. While basically, that's not technically stagflation, but it basically will be in a stagflationary environment when we have basically GDP negative, basically, especially against inflation, especially in real GDP. But yeah, we can have commodity prices going up, but obviously the market is grappling with that, with what it wants to think, what it thinks about that. As we can clearly see in more, well, we can see it more, I would say more so in silver, just because silver has an industrial use aspect to it. I know gold does as well, but just not as much, just because it's so expensive. Obviously silver is cheaper, so if you can use silver in your effectively in your manufacturing process, you do use silver because it's just not ridiculously expensive. Obviously gold may be the best thing to use in your manufacturing process, but gold is too expensive to use in your manufacturing process to a certain extent, so it isn't, therefore it is less of an industrial metal. So there we go. Stock markets, yeah, you can see stock markets were looking good for, this is the S&P, by the way. Stock markets were looking good for a return to highs, but that ended up being pretty much a dead cat bounce, which has been slammed back down, but currently bouncing off this low. But what I will say is that the S&P doesn't look as bad as the Nasdaq. So there's obviously bifurcation between those, how those markets look. Obviously they roughly move in the same direction at the same times, but just different amounts. But I mean, S&P, if you can get basically back above here, well, it won't look so bad. But obviously, as we can see, the Nasdaq is just basically not looking as good. Anyway. So we shall see what happens here in stocks. But like I have said a number of times, that stock markets, I think stock markets are going lower this year, and I made that call at the start of the year. Yeah, I guess it's a big call because number only go up. But yeah, I just think the taxation and just the weighing in of rising interest rates is going to weigh down stock markets. But interest rates rising because of inflation is not necessarily not bad for cryptocurrencies as a commodity. And then also what else was I going to say? Interest rates rising, yeah, and also taxation, to be honest, maybe well, it's not necessarily going to impact commodity prices. It might impact companies that basically produce commodities that are making loads of money at the moment, because they may be targets for taxation. But taxation of companies is not going to impact Bitcoin, basically. Obviously, regulation can impact Bitcoin. Yeah, let's see if that happens. But don't forget, Bitcoin could really be like one of the only games in town. And you know how basically the Wall Street types that have a lot of lobbying influence over the government, they probably like their little racket that they could potentially get going on now, whilst everything else is basically crashing and burning. So maybe crazy regulation into crypto is not necessarily coming, because it may be like one of the only games in town. So that is something to consider. Just pure crystal ball speculation there, on what could happen. But hey, GameStop obviously had its dead cat bounce. Now coming lower. Where's the pre-market? Is it not telling? Why is it not telling me the pre-market? Is that the pre-market? No. Yes. I don't know. Anyway, so yeah, GameStop basically had a nice squeeze yesterday, opened up, came straight back down. I mean, this is just obviously looking like it's going to come down. We don't particularly know why we're looking at it, but obviously people are interested in it because it had a nice squeeze up. But yeah, Bitcoin dominance finally. Bitcoin dominance is, as you guys will be aware, I kind of look at Ethereum more so, because, well, I'm invested mainly in Ethereum linked coins, and also the Bitcoin dominance. There is just a massive bifurcation between like the old 1.0s, old 2.0s, and they all feed into this Bitcoin dominance chart, and I just don't think it's the best indication of the market, really. Well, particularly for me when I am mainly looking at Ethereum. So I do look at the Ethereum more, and I don't potentially look at this as much of a direction. However, this is not doing as bad as Ethereum, because Ethereum has been struggling against Bitcoin more than some of the new old 0.2.0s, the Polkadot coins, even the Binance coins, all those other coins that have been going on a bit of a run. So that has been pinning this down, whilst, well, obviously the major pair Ethereum and some other pairs have maybe not been doing so, and XRP have maybe not been doing so well against Bitcoin. So it's just giving this is just a confusing chart to, well, not chart to read. It's not, you can read any chart not even knowing what it is, but just how it is moving, because of its components, its moving parts. Just makes it not the most efficacious chart to read, from the viewpoint of any particular altcoin that you're really looking at. So anyway, over to Bitcoin. What are those stochastics saying? We were saying 4 hours looking like it was going to come up yesterday, but has subsequently turned down. 10 hour and 12 hour looking like they were going to want to come up, but I suspect they have turned back down again. 10 hour turned back down. I mean, 12 hour still looking like it could turn up. And then daily still diving, but daily will eventually get to a point where it wants to turn back up. 2 days still coming down, 3 day still coming down, weekly turning back down. 5 day turning back down, weekly turning back down, bi-weekly turning back down, and monthly turning back down. So that is not the ideal read that you want to see. However, if this 10, 12 hour and daily do eventually turn around, obviously daily is not even close to, but 10 and 12 hour and then feeds through to daily, start to turn back up, well, we could basically get well, what we'd have to only really consider at that time, a dead cat bounce in Bitcoin also, from what level it could come in at, who knows, maybe around this 42k level, and then based on that read alone, I would potentially be looking for a move up back around to the 53s, and I mean that could very much be a bull trap. It could very much be a bull trap. We can clearly just assess it in real time. Obviously, that's what we do anyway. That's why we look at 4 hour charts. And this is just wild speculation, but assessing it in real time. But obviously, if we do in real time, get basically back above 53 and hold after that pullback. And then, I mean, if we hold this high level here, those longer time frame stochastics could then turn back up, and then we could break it back up. But the initial read though, if that does happen, these do turn back on, we do start to bounce, and we don't get above 53k, would be that we are going to come lower. that would be the read. We'd probably get rejected around there. Well, if we do, we get rejected down there, come back down, then take out these lows, and then potentially come lower into the mid 30s, basically. So that is on the table. Lots of things are on the table. That is based off a stochastics read anyway. That's based off the stochastics read. Obviously, like I've said, depending on how we bounce, how long we hold up, and we can turn those around, and then stochastic read will be different. But that's kind of what we're looking at the moment. So that is it, guys. Obviously, markets are basically getting a bit wary of this rising 10-year. There's lots of memes going around, obviously, with basically this is obviously an important level. If the 10-year gets to $2%, then we are looking at serious problems for a massively over-indebted society, a world. And then that's when the tomfoolery is gonna commence, with basically yield curve control. A lot of people don't know that there's this thing called the Treasury General Account, which I think it actually has nearly 1.5 billion sat there. It's not meant to have that much. It normally only has about 2 to 300 billion in there. Without going into too much details of it, basically the Treasury may decide to actually use that money, and if it uses that money, it can only really go into money markets and basically bonds. So there is basically maybe not far off 1.5 trillion that is still potentially going to come into the bond market. So there's that. And then there's yield curve control. So there are plenty of, well, there's not plenty. There are basically, they've got things they can do before, if they then don't bring this, well, I say bring this under control. This is only doing what it should do. This is only a normal market force, but they've got some bullets to fire to try and stop this rising back to fair value, which, who knows? I would actually guess fair value for the 10-year would probably be at the moment maybe around 10%, and it doesn't even bear thinking about for most people, most investors, most markets. It's just, that would be wild. That would be wild, and it is coming. It's just a case of how long or what games they can play, and what I will say is just never underestimate the games that they can play and how long they can manipulate markets for. So there you go. And yeah, they manipulate markets from the perspective that they are claiming to be doing what's best for everybody in the financial system and the system and all that. That's what they claim. And if you just look at what's gone on with global health issues, when obviously governments are talking about they're doing what's best for the people, even though clearly they're just making themselves rich, then you kind of see that nothing is off the table with these guys. So there is extreme manipulation able to occur. So there you go. Yeah, we potentially got a reprieve as well, as you spoke about yesterday, for the stimulus checks coming in. The good old stimmies, they could give us a bit of a pump in various markets and various things and stuff as well. However, don't rule out the fact that the stimmies may all just run into like GameStop or silver, SLV or silver calls, or just end that money likes to herd and move about like an activist hedge fund. So that's quite funny. That'll be good to watch. Hopefully some of it can just run into crypto. And yeah, and just give us a nice move, counter trend to the overall rest of the market crashing and burning, which is basically that is the dream, isn't it, for a lot of people in crypto. They kind of think that, oh yeah, we crypto up, stock market's down, crypto up, finance 1.0 down, and obviously for basically the most part, in fact not all the part, obviously stocks being up and the market's generally doing okay, it's just been good for crypto, and the opposite has obviously been then bad for crypto. So they have been linked. So maybe we are going to have a decoupling, maybe, but we shall see. Anyway, so there we go, guys. A bit of a longer video this morning, sort of like chewed your guys' ears off with all that. I hope you found it useful. Thanks for listening. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys later.